I just want to do a quick video to kind of explain the ticks that I've been talking about briefly. It's not something that obviously you need to understand uh, to be a trend follower. It's just something that I look at on an intraday basis as the markets are open, just to kind of get a feel for the buying pressure and the selling pressure. I know I've made mention of it before, as far as how the ticks aren't confirming certain price action. So just want to walk you through basically what I was seeing, and just something that you could add to your repertoire, as far as stuff that you look at during the day or after the market closes, just to get an idea, make sure you know that you're in line with the market thoughts. We don't really feel that the market dictates the action. There are outperforming stocks, and those are the ones we try to be involved with. But at the end of the day, ultimately, you want to know whether the market's being bought, being sold, just to have a better feel. And it definitely is nice to kind of know in the back of your head that certain things are happening, and you have a little bit of an explanation. So basically, what a tick chart is it measures the down ticks and the up ticks at any given time. So these bars are actually 15-minute bars. This is Monday from here, so we'll just actually look at Monday first. So this is Monday. So here's the open and here's the close on this side. So Monday, I think it opened lower, and it slowly, improved throughout the day. So the one thing that you notice with the tick charts are there's and again, if this is something new to you, definitely take a quick look at the candlestick tutorial that I did. But these are the bodies of the candle, and these are the shadows on the top and the bottom. So what you'll notice in the morning on Monday was the bodies were closing below the zero line, but we only had a push to negative 800. And normally negative 1,000 is really where you start seeing a lot of selling pressure come in. So we only had one tick that pushed actually to negative 800, which is, it's definitely something to be aware of, but it's nothing to write home about, nothing to panic about. So, as you see, we had 1, 2, 3 bars that closed below zero. And then at that point, the market started changing a little bit, where, the shadows weren't pushing nearly as negative, and the bodies then started closing above zero. And we actually had, at 11:15 in the morning, we had a push to positive, looks like about 920. So that's a sign that the oversold conditions that we came into on Monday morning were starting to dissipate a little bit, and we were starting to get to the point where the buyers were coming in. So as you go through and you look, you'll see that now the bodies are kind of hovering around zero, but the negative pushes are much less severe than they were earlier in the morning. Now they're only pushing 330 through the lunchtime hour. And then again, now we're starting to get all of our candles are closing, above zero or right around zero. You're not getting these huge negative pushes. So that's one thing to look at. When you guys are sitting there and watching the markets, the ticks are something that are always on my screen, just because, like I said, I like to know, if this is something that can be bought into, if it can be sold, because there is the trend following aspect of it, but then there's also other traders that are swing traders and futures traders that look at these ticks and actually formulate their trading plan based on the ticks. Some people may do certain things if the tick hits negative 1,000. I'm not one of them, but there are people out there that do that. So it's just nice to see the ticks and understand exactly what's happening. So as you see, on Monday, for a majority of the day, the ticks were above zero. You know, here's the close, here's a close, here's a close, here's a close, close. So, you know, like I said, the closes are right around zero, but the tails are all positive. You know, there's a lot more positive tails and a lot more pushes to the positive 800 and positive 1000 than there are to the negative 800 and negative 1000. So that's your first sign. That's the first thing that you need to look at with the ticks, is how deep and how far are these ticks actually pushing. Because like I said, the tick is basically how many stocks at any given period are ticking up compared to ticking down. So if there's more stocks ticking down, more stocks going down by a penny or down by a tick than are going up, that's when you're going to get these negative pushes. And again, the exact opposite, where you'll get the positive pushes. And then, you know, everything really between 800, or actually, you know, 600 and negative 600 is kind of noise to me. I really look at the 800s and the 1000s. So then if we go into today, let me make sure, you can see a big change. So now, you know, whereas the market started out positive in the morning, again, not very much pushing negative in the morning besides these first two bars, which you'll get. The first two bars and usually the last bar of the day. You know, everything kind of imbalances out. But, you know, you're not getting those pushes, and then all of a sudden something changes. Now you're getting a negative 1000 push, another negative 1000 push, another negative 1000 push, and your positive pushes are, you know, in the 200 to 300 range. And again, a majority of your bars as you're going throughout the day are closing below the zero line. So again, there's two different ways to look at it. There's the, you know, the bearish day that turned into a bullish day, and a somewhat bullish day that turned into a bearish day, and the two different ways that the ticks react on those days. So like I said, you could see down here, I'll just highlight it for you. You know, you have 1, 2, you know, all these negative, and even you had almost, you know, I didn't even realize, but you had a negative 1150 and a negative 1100. Those are significant selling. That's significant selling pressure. That's not just noise. That's something to be aware of. And you know, as the day went on, we were bearish, and the market closed lower. So that's the way I use the ticks. You know, it's definitely something to, you know, even if you don't trade off of it, I do like to look at it and at least see, you know, how much conviction, I guess, is in these moves, or is it just a false move? Because, you know, when you look at the market, you know, you need to have the ticks that are confirming the move. And you know, like I said, I alluded to it before in a couple other posts, that the ticks, and maybe even tweets, that the ticks weren't confirming the move lower, and sure enough, by the end of the day, we ended up higher. Where today, if you ask me, I would say no, the ticks absolutely confirmed a lower day in the market, because of the majority of the bodies are closing below zero, and because of how many pushes you had to negative 800 and negative 1000 as compared to the single push to positive 800. You had one push to that all day. So like I said, you know, that's just something I look at. Definitely, if you have any questions or comments, you can hit me up in the comment section.